How's everybody doing? So I hope everybody's having an awesome Sunday. This is 50 Pips, 2nd of March, 2014. So here we go for another month. Again, just a reminder, I'm not making any trade calls or recommendations. You and only you are responsible for the trades you may decide to take. And the fact that you're listening to this means that you read and understand the disclosures on the blog and understand that basically we're here just doing some technical analysis in a learning context for educational purposes only. So guys, what's going on? What's going on? Basically, keep in mind that we're going to go into an action-packed week, so we've got a lot of event risk going on with the week. So again, I don't really want to read through the whole data calendar for the week, but I think it's really important to understand that we do have a lot of event risk. So the whole week is going to be have a lot of stuff going on. So we're starting basically with Monday. We've got HSBC, the PMI out of China. Then we've got manufacturing PMI out of the UK. We've got Draghi speaking. We've got ISM out of the US. Then we're going into Tuesday. We've got Australian data. Then we have the RBA with a rate statement. So the first central bank on the wires on the week. We still have PMIs out of UK. Then the next day we've got all the services PMI, the GDP out of Australia, and we've got the central bank on the wires. So we got the BOC with the rate statement on Wednesday. Then apart from a US data, we're going into Thursday. Not only we have a lot of Australian data out overnight, but we've got the BOE and the ECB and the US data. So we've got another two central banks on the wire. And then the little cherry on top of the cake, Friday, is apart from all the data, it's non-farm payrolls in the States, right? So really there's a lot of event risk, and basically keep in mind that there shouldn't be any really calm day, but there's basically potential for a lot of movement. So that's something that everybody has to keep in mind. So basically going into the week, we have to just, are these moves that have started going to continue, or are we going to get some wheeling and dealing? That's the big question. I'm not going to in terms of the future side, everything's pretty much as we discussed. ES has pressed new highs. We're looking for that 1850 to get taken out. We said it's fairly rare for market to fail from that kind of pattern, so we're still always looking for buying opportunities for new highs. We actually got those new highs. We'll talk about that a bit more next week likely, but I wanted to focus on some of the forex pairs. So what's going on EJ? Basically on Euro JPY, we talked about what we called, on Twitter, I kept on calling it the money line, basically the 139.00. And in one of the previous updates, we discussed the importance of this line, right? And also you could see it. You can go back on that video and watch it, but basically it's fairly clear, right? Once we broke above this area, we held here for 1, 2, 3, 4, 5, 6 days. We only had wicks, basically the market probing below, couldn't close below that level, and then we moved up very aggressively. When we came down, previous support didn't hold. We had an aggressive move and we're right back above, and exactly the same pattern was developing. That's when we talked about it. That's when I was posting that on the blog and on the Outlook. And you see basically it's true to the levels, being true to what it's been doing is just completely held. And then even on the dips, we talked about it again, it's kept on holding, right? So as long as we can't get daily closes below the 139, we expect those 140.50s, 141s to keep on being tested. And going into the week, basically these are the pivotal levels, right? This is the tight-ish range we're playing in, and that's what you have to look at. And what we keep on saying is no big changes. Don't get confused by velocity of move inside range. So inside this range it can move relatively quickly, but what is important, and since we've done the update, you can see, is not how quickly we move inside the range, but what is important is what happens from a daily close perspective. And you see that so far, even though that low range has clearly been the more interesting buy, we haven't closed outside of the top range either. So still, don't think it's a done deal. Wait for this to close outside that range, and there we'll likely see some kind of follow through. But it's very choppy, and it's likely going to remain choppy unless we start to see price closing outside this range. In terms of Aussie, basically we kept on talking about the 0.90 level, and basically bull bear line, that's exactly what happened. We came back, we couldn't even get back into this level. We said close above. On a daily, we'd expect this to continue. I'm on a 4-hour chart here, by the way. We'd expect this to continue to go back up into the 91s. Failure to close above, we'd expect this to go back down into this 200 on the 4-hour, and basically this previous resistance breakout zone that was holding. So right here, We're staying here. We're right back into the support, and it's going to be an interesting support. If you look at it from the daily, the 200 is clearly the risk to the upside should we start shooting up to the downside, and the downside is, well, it's right here what we're looking at. So keep in mind, we've got the RBL and the wires. We have to see what's happened. Again, we expect this to stay relatively heavy to sideways chop in the following months. But right here, it's looking like it still wants to test some more downside. And what I would be looking at is how we behave on presses back down into this 200 and this previous resistance that acted as support here. So as long as we don't close back below these 88.30s, or if you want to call it the 88 level from a daily, we could see a lot of choppiness, similar like the EJ. Don't get confused about velocity of move inside range. Could see some very choppy action. But if we start to see daily closes above the 0.90s, expect this to try and make its way back into the 91s. And if we get daily closes below, right, this 200 below this previous resistance zone, let me just tell you exactly where it's coming in at, right? It's coming in at those 88.80s, right? Then expect it to trade with a very heavy tone and probably try and make its way back down into these support zones, down into the 87s, 87.50s, okay? Euro and cable, what's going on Euro and cable? So again, pretty classical action really. Market just kept on trying to press lower inside supports, but without being able to get any traction, right? And you can see this at here, you know, press here, buyers coming in, very choppy, came back down, buyers came in again, slapped back down, and no traction. Just clearly a market that can't get any new traction at lows, can't find any new sellers at lows, and basically it starts to rotate back up. So, you know, a lot of people are getting off guard, you know, talking about what would happen with Ukraine, or, you know, looking at Euro GPB, just reading it a bit slightly wrong in my opinion. But clearly, you know, as we said, the broader picture, nothing's changed, right? This whole 6650 into 6600 is the key support zone that has to hold this aggressive breakout to the upside. As long as this area holds, keep on saying the same thing, and we don't get a daily close below this 160, we expect this to continue to try and rotate up in extensions and continue to try and take a stab at those highs and break new highs. If we break below, then this will likely start to trade very heavy. We'll have to look one of the bigger 50 backs, but at the moment, as long as it's holding this, the path of least resistance is probably some kind of a grind back into the 68.20s, okay? So going into the week, what I would look at is clearly is just the downside. We know what the downside is. It's the support into 6650, 6600, right? Right now, if this is going to continue to move aggressively, watch what happens here at the 67.20s into 6700, right? Because this was that previous resistance that got sold hard, right? So as long as we hold above this zone, especially at the beginning of the week, expect this to continue to try and test to the upside. Now, if we break and hold below, then we could see some kind of retracement. You know, whether that retracement is going to be much bigger than that, so some people will be looking at the 50 back of this move. We'll have to see, but I don't think this is still really fibbable territory. I wouldn't be looking at trend lines or fibs in this area. I would be focused on the previous support and resistance zones and the breakout zones. Like, look, it's a market that's clearly has bids and offers at certain levels which are clearly interesting. So best bet is probably to see how price reacts at those key levels, right? Not necessarily trying to get a bit too fancy inside the range. But again, as long as we hold here, we'd expect this to try and continue to break higher. So right now we're stuck between that spike high that got sold and the breakout zone. And we have to see some kind of resolution outside of this area. And to the upside, 68.20s a track. To the downside, we're probably looking at 66.80s, 66.50s back into the lows. And Euro, what's going on Euro? Again, Euro, very similar action. We went into the other week, we were talking about the fact that clearly the risk was for some kind of downside pressure if we couldn't break quickly above these 37.50s into 37.70s. All you guys who follow me on Twitter also know, or on these that I've been looking for new highs to print for quite some time, so that hasn't changed. And basically what we were looking at is move back down into these lows, and what we said is this is key for this to hold the upside in an aggressive fashion. If we break below these whole 3680s, we'd expect the 3650s test to come pretty quick, right? We came back down, couldn't get any traction, bam, we got that quick test back into the 3650s. Very nice hold, just clearly not able to find new sellers at this area, and bam, the ramp up came, then all the way to new highs. Quite classical, right? So right here, what's going on? I still expect this to continue to try and press higher. Keep an eye. The focus of the upside is really going to be, you know, that spike high we got over the holiday, right? And that whole zone that comes in at those 3890s. Going into the week, what I'm looking at very similar to cable too is just focus on the levels, right? Focus on the price action at key zones. So right here, clearly these 38 30s have been protected. This whole area, we couldn't get any traction above 3800. You know, some people booking quite normally, right? Understandably booking profit on the long. What you want to look at here going into the week is how we behave in this whole zone. I think Euro's trading about 3760s in the pre-market, something like that. So probably about 40 pips down from here. We'll have to see how that plays out. But going into the week, a move back into these 3770s to 3750s, you know, is really no big deal. It's quite healthy, right? And so this is going to be the support, and we've got the resistance, probably that protection of the 3850s, right? So if we go into the week and we come right back down into this support and we hold it, well then most likely the path of least resistance will be some other kind of test to the upside and continue to try and trade to those 3890s. You know, we're talking about the swing move in euro is pointing to 141s. Go into the beginning of the week, if these 3750s can't hold, and they can't hold quick, then do not be surprised to see this trade all the way back down into these 3680s, 3690s, this whole zone back here we tested, okay? So this is clearly the zone to watch, 3730s into 3750s. That needs to hold for us to continue to move higher in extension aggressively. If that doesn't hold, then expect to see some kind of retracement back down into the whole zone we started to press up from. So again, you know, markets have been, we've had bursts of action, quite tradable, sometimes boring. We've had some bursts of action just because markets have been relatively slow and they tend to pick up at key moments. Keep in mind, we've got a lot of event risk. Keep in mind, people are going to be talking about the Ukraine again. A lot of people tweeting me about, you know, Euro CHF, USD CHF. Again, it's no big surprise, right? CHF is catching a bid on you know, flight to safety. People are just a bit worried. So again, expect that to be interesting this week on how the SNB is going to defend those if they're going to come in especially on Euro CHF. Those are going to be charts that will be interesting to watch. ES will be interesting too, but again, the focus is really on all the central banks. So again, the main pairs, those majors, are going to be key, and I would say half an eye or one eye on the CHF for possible interesting opportunities. Okay, so I hope that was good. If you like the content, don't be shy about sharing it. Have an awesome rest of your Sunday wherever you may be, and see you around on Twitter, on the blog. Have an awesome one. Thanks for listening, guys. Bye bye.